FA1 Part B. Recording and Accounting for Cash Transactions. Chapter 10. Maintaining Petty Cash Records. The topics that this presentation will cover are 1. The purpose of petty cash. 2. Security and control of petty cash. 3. The impressed system. 4. Petty cash vouchers. 5. The petty cash book. 6. Recording and analyzing petty cash transactions. 7. Recording petty cash transactions, sales tax, VAT. 8. Topping up the float, balancing off, and posting petty cash. 1. Petty cash is used to make small payments. It needs to be kept safe in a locked box. The person responsible for the security of the petty cash should be the petty cashier. Any payments made from the petty cash must be authorized, and all transactions need to be supported by receipts and vouchers. The following people are usually paid out by the petty cash. Employees, for the reimbursement of the expenses that are paid out from their pockets. And suppliers. Petty cash can also be used to pay casual wages. When paying wages from petty cash, the tax collector needs to know. You will still have to declare any benefit contribution, and tax that apply to the wages, to the tax collectors. Any payment of wages from the petty cash need to be authorized by an office manager, and the details of the names and addresses of the casual labor need to be kept. Stop the lecture. Answer the question on page 203 of your interactive text study guide. 2. Any payment made from the petty cash needs to be properly authorized, and shown by a signed voucher, by the authorized person, and the person receiving the cash or payment. The vouchers must be supported by a receipt. The person in charge of the petty cash is the petty cashier. That person is responsible for making sure that the petty cash is in a safe place, for making the actual payments, and for making sure that the payments are properly authorized. The petty cash is usually kept in a locked box, called the petty cash box. It needs to be secure and kept in a locked drawer. The keys to the petty cash box and the locked drawer should be held by the petty cashier. Petty cash should not be used to pay large amounts. Large amounts of cash are an obvious target for theft, and it is also not easy to control the use of large amounts of cash, so it will be prone to error and dishonesty. There should be a maximum limit on any individual amount, for a payment from petty cash. If the amount of the payment is over the maximum amount, the petty cashier will refuse to make the payment. If the payment is for an employee, they need to submit an expense claim form. And if the payment is for a supplier, they need to submit an invoice to the accounts department. Any payment from the petty cash needs to be properly authorized. The petty cashier will have a certain limit, for which they can authorize. If the amount of the payment exceeds the petty cashier's limit, then the payment needs to be authorized by the petty cashier's supervisor, or another authorized person. In exceptional cases, a payment that exceeds the maximum limit set, for an individual payment from petty cash, may be paid out, if it is authorized by a senior member of the company. Receipts need to support any payment from the petty cash, so if there are no receipts to support the claim of payment, then the petty cashier can refuse to make the payment, and will refer the claim of payment to their supervisor. If the receipt is a till slip with only the name of the supplier, and the amount of the payment on it, and no description of what the payment was for, the nature of the purchase needs to be written on the slip, but if no receipt is possible, the payment needs to be authorized by a supervisor or another authorized person. If there is sales tax, VAT, on the receipt that can be claimed back, the following details need to be on the receipt, in order to claim any sales tax, VAT, from the purchase. The total payment. The tax, VAT, paid. The supplier's name and sales tax, VAT, registration number. And the date of the transaction. Stop the lecture. Answer the question on page 205 of your interactive text study guide. 3. An impressed system is usually used for petty cash, and it is a form of control on petty cash. An impressed system is when a certain amount of cash is held in the petty cash box. At regular intervals or when the cash in the petty cash box runs low, all the vouchers in the petty cash box are added up and the total of the vouchers is used as the amount to top up the impressed amount. For an example of using the impressed amount system, see page 206 of your interactive text study guide. Stop the lecture. Answer the question on page 207 of your interactive text study guide. 4. When a payment is made out of petty cash, they are recorded on petty cash vouchers. On the voucher will be the following details: the details of the payment, the amount paid, the name and signature of the person receiving the cash, the authorizing signature of the person who authorized the payment, the date of the payment, the voucher number. All petty cash vouchers are numbered in sequence, so that the payments can be traced from the petty cash book to where they are filed, and in order to do a completeness check. And the relevant receipts to support the payment, attached. For an example of a petty cash voucher, see page 207 and 208 of your interactive text study guide. An employee may need cash from the petty cash, to buy something for the company, but does not have enough cash on them to buy the item, then claim it back from petty cash. The payment that is taken in advance needs to be authorized by a supervisor or an office manager. The petty cashier will then write out a voucher, and will insist the person taking the cash gives a receipt and the change back, as soon as possible. Once the receipt and change are received, the petty cashier will alter the voucher to show the exact amount of the payment. For an example of what the vouchers in that process would look like, see page 209 on your interactive text study guide. There needs to be regular checks on petty cash. The notes and coins, plus the total value of the vouchers, should equal the impressed amount. If the amounts don't add up, then there may either be a mistake in the vouchers or there may be theft occurring from the petty cash box. In some companies, employees are allowed to borrow money from the petty cash for a day or two, but then they have to pay it back. As soon as someone borrows money from the petty cash, they write out an IOU on a slip of paper and put it in the petty cash box. In the petty cash box, an IOU is equal to cash. So the notes and coins, plus the total value of the vouchers, plus the total value of the IOUs, will equal the impressed amount. When the money is paid back, the IOU slip is thrown away. It is not very often that money is put into petty cash, but there are rare occasions when it does happen. For example, when an employee uses the company phone for personal use, he will pay for the call, and the money will be put into petty cash. Once money is received into petty cash, the petty cashier will make out a voucher. The impressed amount will now equal the notes and coins, plus the total value of the IOUs, plus the total value of the vouchers for payments, less the total value of the voucher for receipts. Stop the lecture. Answer the question on page 211 and 212 of your interactive text study guide. This is the end of part 1 of chapter 10. See the next video lecture for part 2 of chapter 10.